Hey everyone, welcome to another Level Logic video. Just quickly, if you don't already have the indicators, head on over to levellogicindicators.com. Links in the description if you'd like to check them out. Today we're going to be going over a couple of trades I took earlier in the week, which managed to catch the low of the day during London. So I'm going to go over how I stacked Confluence with all the indicator data and caught both these trades. Just before we get into the actual indicators though, I just want to cover why I was sort of interested in this area. You can see here that during Asia all day, we'd actually been sort of building up all these highs, building up all this internal range liquidity, and we're in this tight little range from this high down to this low. And a common thing that happens is sometimes we come back down to what I call the initial reaction. So you can see we had this big drop to form a low. We've come up, we've reacted to something and come back down and formed another low, retesting this extreme. Then we've carried on up, and then we've sort of done a grind around all day, forming some liquidity highs to take later on. And what can sometimes happen is you'll come down and you won't actually take that low. It'll be a bit sneaky, and all it will take is the initial reaction low. So that can often be a trigger for me to then look for a trade to take out this IRL to the upside. But let's look at the indicators and see what they told us. Okay, so here on the chart, I've got SEIZ, which is the green boxes over here. So that is set to the 12-hour. That's typically what I just have it on the chart as for most of the day, just to see as kind of a top-down analysis of where we are. And then I rely heavily on the dashboard to show me what the other levels are doing and where we're at. So I can see that on SEIZ we're external, it's green, so that means we're external low. Which means we've taken out the previous 12-hour candle, so that's good. That's kind of like we've already taken some quite high time frame liquidity, and we're sitting just below the median in that 50th to 75th percentile range. And you can see over here, I've marked this vertical line. That's where this current 12-hour interval finishes. So we've got a bit of time left for this interval to finish, and we already know that it's unlikely that it's going to go much lower than where it already is. Okay, so that's kind of piquing my interest, plus the fact that we've taken that initial reaction that I spoke about just before. More, I got an alert for the 4-hour that had crossed and the 1-hour. I've got alerts set for all of these more time frames crossing the 50th percentile. So I got pinged for these two. They've both crossed the 50th. We can see here that the 4-hour has a 78% chance of retesting this dotted line here. And we've immediately opened and come down to the median, and then now we're shooting back up. So that was piquing my interest there to start hunting around for a trade. Okay, so in the next slide, I've just turned the other SEIZ indicator off just to make it a bit clearer. And here I've turned on HIPA, which is all these internal range liquidity lines. And I have turned on MERA, which is showing me where I am across 3 timeframes if I'm at the extreme discount or extreme premium. So you can see here that we have gotten into the extreme discount. Because the new 4-hour candle has opened, MERA has actually recalculated and says we're still inside a range from previous 4-hour candles. So we haven't quite aligned up to all the discount zones like we did here because of this new 4-hour candle. But that's okay. I still know that I'm sort of in the ballpark of being in a heavily discounted area. So I'm still happy to look for trades here. Still have all this IRL to target up above, which has quite high probability as well. So now I'm starting to look for my entry confirmations, which are order flow shifts. So you can see we've made a low here. These little reactions in here, if you imagine this is like a line chart, we've come down, we've come up a bit, we've come down, we've come up a bit, we've formed this low. Now we're coming up and we're starting to break these little fractal highs that are shown by these candles here. Okay, so that's my first indication. Then we've come down, we're retesting the extreme of this candle, and we've got the same thing. We're coming down, we've gone up, we're coming down, we've gone up. So as a line chart, you can imagine this sort of zigzag, and then we're coming up and we're breaking that structure, which is shown in the fractally within these candles. So that's my trigger point. We've retested the extreme and we've had sort of a double confirmation. I've still got that 4 hour open that has a 78% chance of being tested. So at a minimum, I'm hoping that if I enter here, we're going to go up a little bit to at least retest that open and give me some space to go break even, or bring my stop up to below this low and reduce my risk down even more. Okay, so here you can see as price went on, this was actually ended up as a break-even trade. We did push away a little bit, which gave me some space to go to break even, but we couldn't really push past these highs with much displacement, so we kind of struggled around. And then when it got to London Open, 3 a.m., we broke down, which is common because you can get more manipulation at London Open. But we're still in the same ballpark and still have the same idea as what was going on with this trade. Okay, we're still in that 12-hour SEIZ 75th percentile zone. We still haven't broken the range low, and we've still taken that initial reaction. So I know that NQ can be very sneaky sometimes and get incredibly close to a range high or low and then turn. Whilst everyone's thinking it's going to take this, it turns at the very last minute and takes everyone out. So yeah, as I said, you can see here, we're still in that 12-hour range that we want. I've also had an alert go off that the 4 hour has crossed its 50th percentile. So this new 4 hour that's opened, it has come down, taken out the previous 4 hour low candle, which is good. Think of that as kind of like more liquidity is being taken, and we've crossed that 50th percentile. So you can see in this next slide here, we're bang on that median of the 4 hour of this 4 hour that opened over here. Okay, so that's another good sign. Now on more, so the 4 hour 78% retest that I used over here, that can no longer be used because it has been retested. Okay, so that stat is not relevant anymore. However, we have had the table show up that we do have a quite high probability 3 hour to test, and so 73%. And this is quite nice because it looks more like a manipulation because we've immediately opened and dropped, and we've dropped quite a distance from this open. So if you think about the high time frame candle forming, if you imagine this as 1 3 hour candle, this is quite possible that it's forming its low wick. So you're forming your low wick first to then go up to find wherever your high is, to then close and form your whole 3 hour candle. So I'm liking the look of this, whether we cross the range low and sweep around and then go, or if we go from here. I'm liking the confluence of what more is telling me here as well. Okay, like the first trade, let's go back and look at what HIPA and MERA are telling us. So HIPA is pretty much the same. We've still got all this liquidity stacking up and clustering to the upside, so that's a really good target. And MERA is better than it was before on this original trade. We're now definitely in extreme discount of the range across the 1 hour, 4 hour, and 12-hour time frames. Okay, so you can start to see we're coloring the candles for that extreme alignment, and we're starting to get some alerts which fire at the earliest possible signs of candle breaks to sort of alert us into the fact that we could be getting a shift. Okay, so now I'm hunting around for my entry confirmation. So I've just turned off a lot of the indicators just so you can more easily see what I'm looking at. But what we've done here is similar to what I spoke about on the earlier trade. We're coming down and we're sort of making this fractal structure in here, coming down, coming up, coming down, coming up. And so we've started to break this high in here, and then we're coming down and we're retesting that extreme. And this is kind of my favorite thing to see. It's probably my favorite entry model, is that we're sweeping this initial reaction within the entry model. So just like I showed you earlier, how we've swept over here the initial reaction of the range, we're doing the exact same thing here. So at the very last minute, we're coming down, we're sweeping this little reaction here, and then we're breaking again. So that's probably my A+ setup for an entry model. This is down on the 15-second because I was really quite interested that it may turn at the last minute here. So I wanted to get a really, really tight entry, but I still wanted to have some sort of double confirmation because it could just smash this low. So I got that double confirmation even with an additional low time frame sweep in there. So I was happy with that. So that's where I entered and targeting that first cluster that HIPA was showing me. So here you can see the result. You can see we've absolutely boosted off that low, come up and taken all that IRL that HIPA was showing. And that was a great trade. So it ended up being low of the day. You can see I left heaps of money on the table and it went up, I think 260 odd points or something. But that's fine. That's all I need. So all the stats played out, all the confluence stacked up in the right way. So that was a great trade. Something else I will just want to show with this chart here is I've got it set to 4-hour SEIZ. So what you can see is we're external here. So if you imagine, you can see that these are all different intervals, right? These blocks of the different colors. So you can see here that we've gone external to the previous one, okay? So that has to happen when you're forming a reversal, right? So if you think about how candles form, we've come down and we've closed this candle, this 4-hour candle. Then we've come down again and we've gone below this previous 4-hour candle, okay? That is how this has to happen for a reversal to happen, okay? So from here, the next candle, we want to not take this low. So if you're wanting a reversal trade, you're looking for external extensions, which is what these green boxes mean. So this is finding a trade in here externally. If you don't want to do that and you only want to look for continuations, then the next thing you need is for this to close. We know that it's now external, and now you want to anticipate that it's going to, the next 4-hour candle's low is going to be internal to this candle, okay? So you're expecting this to be the pivot low candle, and then within this candle, you're wanting the next 4-hour candle to form its low and go up here, okay? So for that, you use SEIZ internal zones, so which is the blue here, okay? So you can see here, if this is our if this is our previous 4-hour candle and we've formed that external low, okay, so it's a potential 4-hour pivot, our next candle can come down and test some internal percentiles, okay, so which you can see is exactly what New York Open did. It came down, we swept out a bunch of relatively equal lows here for some liquidity and took out some IRL there, and we've just almost exactly tapped the median internal, and then we've carried up from there. So you could have looked for a continuation trade from down here. And a similar thing can be shown with the 12-hour. So the 12-hour, we've been a 12-hour external, shown by the green external boxes, and then coming back down to retest this previous 12-hour candle as the new 12-hour candle, and forming that new 12-hour candle low here, just again on the median or below. And yeah, could have looked for a 12-hour continuation trade there and target the high percentiles as your target, okay? So that's basically it. I'll continue doing these trade recaps so that you start to get an idea of how to stack all the confluences, and you'll start to see that it's continually the same thing that I'm stacking. I'm still stacking all the same data. It might be a different time frame, but that comes down to what the dashboards are telling me. But what you'll see is it's the same common themes of data that I'm stacking to get these trades. And you can also see that personally, I like to have quite tight risk management. So I like to have a really tight stop loss and go for high R trades. So that allows me to, I don't need to have some 90% hit rate because most of my trades are 5R plus. So that gives me some breathing room to lose a bit of hit rate. But you can see once you start stacking these confluences, it's quite easy to get to at minimum a break-even trade or or catching quite a large trade. So yeah, thanks guys. If you have any questions, leave them in the comments below, and I'll see you in the next one.